What's up everyone, it's Scotty with Money Investing. In this video, I wanted to talk a little bit about a brand new company. We have done a couple of videos on this stock before, but wanted to dive in deep and talk a little bit about what this business is all about, where do I see it going in the future, what type of potential it has. And they are going to be reporting earnings for the first quarter fiscal year 23 next week on Tuesday, May 9th, after the markets close. So again, I'm going to break down what the expectations are, revenue, earnings, outlook, intrinsic value calculation, and the technical analysis as well. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. If you're interested in joining us, the first week of the month is the best time to join. You'll get access to all the buy and sell alerts, and of course, not to mention the private live streams and the other private benefits as well. So the link's going to be down below. So the company that we are talking about today is going to be similar to Uber and Lyft, but in the different landscape, and that's going to be Airbnb, ticker symbol ABNB. And the reason for the analysis now is that the company has turned the corner towards profitability. Last year in 2022, they did report full GAAP profitability for the fiscal year 2022. So that was a big shift in the overall business. And they are guiding for some very strong numbers in the first quarter 23 as well. So very quickly going over the expectations. Again, they're reporting on Tuesday on May 9th after the markets close, and the expectations are 20 cents per share in EPS with revenues of coming in just under $1.8 billion. So Airbnb, personally, I've never booked through an Airbnb. In fact, I will be staying in my first Airbnb at the end of May. I'm going to Malaysia for about a week, and I will be there actually using Airbnb for the first time. But I have used experiences. I think experiences is absolutely phenomenal. It gives you, or it gives a lot of people the opportunity to connect and learn more about the places that are going to. I used experiences when I was in Europe. That's literally how I went for paragliding. I used experiences to get a nice tour of Milan in Italy. And I'm going to be using experiences in Malaysia to go on these bike tours and of course on these hiking trails. So experiences, I think, is a fantastic feature of Airbnb. I've used this a lot and I'm planning to continue using it for wherever I go. But when it comes to stays, I'm going to be using it for the first time. So I'm going to share my experience, of course, once it's done. But I know Airbnb, lots of people have used it. Lots of people are either hosting it or are consistently using the platform when they're traveling, whether they're traveling solo, whether they're traveling with their significant other, with their family members, with their kids, whatever it is, people have used Airbnb. Now, there's pros and cons, right? Pros are that you get access to a nice home, nice a place where you can stay for a lot cheaper than where you would spend on a hotel. And the cons are, of course, you're staying in somebody's home, right? This has always been a little bit of an issue, and there's been reports of partying and excessive use of different things, and of course, sound and everything. So there's been pros and cons with this business, but I was watching the interview of the CEO just a couple days ago on CNBC, and they are going to be using AI to incorporate better and better policies. They're going to be enforcing them in a more strict way. And again, they've got, I think, over 70 different policies worth over thousands of pages. So they've got like big stash of papers and just policies on their website that is protecting both the host who's hosting the actual home and then of course people that are staying. So that's where we are with Airbnb. But if you come over to the financial metrics, Q4 2022 revenue came in at 1.9 billion. It was up 24%, and for the entire fiscal year 2022 revenue was $8.4 billion. That was up like 40% on a year-over-year basis. Incredible growth on the revenue side. And net income was up to $1.9 billion. So that's a pretty good growth on a year-over-year basis because they have been generating losses. And if you take a look at the margins, 23% net margins. They mentioned our first full GAAP profitable year. 23% net margins included the most profitable Q4 ever, 17% margin, both periods delivering double-digit year-over-year margin expansion as well. Adjustable EBITDA here, $2.9 billion. And again, that was also very strong. And free cash flow coming in $3.4 billion at the moment. That was 49% growth on a year-over-year basis. And that's a pretty good margin as well, right? So if you do 3.4 divided by 8.9 or 8.4, we're looking at a margin of about 40%. That's pretty good, right? That's significantly good here. And again, if you do the math, the company is trading at 75 billion, so divide 75 billion, they're trading at a 4.5% free cash flow yield. Or we can also look at it on a reciprocal basis, so 75 divided by 3.4, they're trading at 22 times free cash flow at the moment. Not bad for a company that's doing 40% margins in free cash flow. Gross booking value was $63.2 billion. So again, they are a fee business, right? So they charge a fee on the transactions that go through their business model. That was up 35% year over year. And nights and experiences booked 393.7 million. And that's for the entire year, 31%. So you can see that there's significant growth there for people in general. I also encourage you to look at experiences. You can definitely find something to do, and you can learn something, and they're not really that expensive either. This right here is going to be the quarterly revenue. Again, consistent growth even on a quarter-over-quarter basis and on a year-over-year basis here. And quarterly net income also turning that corner. That's why I'm like, super interested in this business now, because it's actually profitable. Q4 2022, 17% growth, and they are turning that corner towards profitability, which is, again, a big piece to why I look for companies, that are profitable in the first place. So consistent revenue growth, consistent gross profit growth, operating income just turning positive now. And this right here, net income coming in at just shy of 1.9 billion. Shares outstanding for the last couple of years have been pretty stagnant. They have been around 600, 700 million shares outstanding. So we are going to account for some share dilution in our analysis when we do calculate the intrinsic value. And this right here is going to be the outlook. So revenue, they're expecting somewhere between $1.75 and $1.82 billion in the first quarter 2023. This represents a year-over-year growth of about 16 to 21%. So we are slowing down on the revenue growth here, especially what's going on with the overall economy and the landscape of the macroeconomic factors that are playing through. But they are still expecting pretty good growth. And I think as they see that margin expand, that operating leverage starts to come in, they're going to see better and better profitability on the bottom line. And that's really where, big money starts to step in, right? If the company can generate better margins and better profitability, better earnings, that's what big money is looking for. And I was actually surprised to learn that Airbnb is actually a very efficient business as well. I mean, 82% gross margins. We've got net margins of over 22, 23%, as we learned earlier. Free cash flow margin was close to 40%, but they have also been at close to 31% here in the most recent quarter. And look at that return on equity, return on capital, and return on assets. This is actually a very efficient business at the moment. So I'm actually quite surprised that Airbnb is pulling in some very, very strong margins and efficiencies for the company. And you know what? I was surprised to learn the balance sheet too. Like this was, it's kind of like sometimes there's a great company right in front of you, but you just don't notice it. And Airbnb was, or at least in my opinion right now that I'm doing the analysis, is one of those companies that, has very nice consistent growth in revenues, profitability, now turning profitable, right? And the margins are expanding. You've got EBITDA is growing, free cash flow is growing, and the balance sheet is also phenomenal because they're sitting at over $9 billion, actually almost $10 billion worth of cash and marketable securities, total assets at over $16 billion, and their long-term debt, which is going to be over here, is under $2 billion. Not to mention their total liabilities are $10.4 billion. So they've got cash and marketable securities equivalent to their total liabilities. So they can pay off their all liabilities simply by using cash and the marketable securities. And one thing that I loved about Airbnb was their goodwill. Their goodwill is only $650 million, right? So versus $16 billion on their total assets. So they're not, stretching themselves on goodwill here. It's a very, very small percentage of their balance sheet. So this is a very, very good balance sheet, so to speak. So again, over $9 billion in cash, very little debt. So we've got a negative net debt of $7.2 billion. Very strong quick ratio, very strong current ratio. Valuation's a little bit overextended, I would say, because again, if you do the math, $75 billion divided by 1.9, which was last year's net income, they're trading at 39, close to 40 times earnings. And the growth is not at 39 to 40% for the future. Price to sales trading at over 7 to 9, which again is a little bit on the higher end, and 20 to 22 times free cash flow for the business. This is going to be the earnings expectation for Airbnb. So analysts are expecting EPS to grow from $3.42 all the way up to $14 per share over the next 9 years, and revenue also to grow from $9.5 billion to over $27 billion. So once we account for these numbers for Airbnb, the compounded annual growth rate ends up at almost 20%, right, for the next 5 years. So 19 to 20% is going to be that CAGR for Airbnb, and 17% over the next 9 years. So once we plug in, let's just say 19% for Airbnb in terms of growth, because they're just turning profitable and the growth rate can certainly be a lot higher in the next 5 years. And the PE multiple, let's just go with 25. I'm not going to go with, crazy 39 to 40 times multiples. 12% discount rate, 10% margin of safety, and share dilution of, let's say, 1%. We end up with a fair value of $81 per share. $81 fair value with the price right now trading at $120. Definitely does suggest that 32% downside is needed. In fact, Airbnb, I think, was trading exactly at $81 back in December. So back in December, it was trading at those levels. And I think after they've reported a very strong year, they've seen a very nice rally of a little bit over 75%. Rightly so, because they are, again, turning the corner towards profitability. So here we have a company that has a lot of potential, strong revenue growth, gross profit growth, turning profitable on the operating and on the net income side. Margins are very strong. Capital efficiency is good. Balance sheet is fantastic. Valuation's a little bit of a question mark because, again, 39 to 40 times earnings is a bit too high. So all things being said, $81 to $82, I would love to at least have a little bit of a starter position on Airbnb, considering that they can, again, achieve that profitability over the long term. They can continue to be profitable and execute on those margins well. So that's where we are with Airbnb. Let me know your thoughts down in the comment section below. With that flexibility range, I'll be looking at somewhere between $77 and $85 per share for this business. From a technical standpoint, I mean, it's really just been consolidating in that range, got a double top resistance at 217, sold right back down to $81 during this entire bear market in 2022, consolidated sideways at that support for a couple months here before rallying all the way back up, and right now trading just under 120. So support at $81, $82, resistance at 217 for Airbnb, and of course the earnings are coming up next week on Tuesday. So hope you guys enjoyed this video. Find it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.